It's been a very challenging year for MLP securities this year. MLPs, on the back of declining commodity prices, the MLP prices have come down a lot as well, which has obviously been frustrating and distressing for MLP investors. It's interesting because the fundamentals of MLPs, while certainly buffeted by some of the challenges we see around them in the energy space, the fundamentals have actually held up relatively well. And the key fundamental that we focus on most is on the distributions that MLPs have paid out. And in 2015, the MLP sector has grown its distributions at a very healthy rate, actually north of about 10%, which is kind of an all-time high rate. So it's been an interesting year for MLPs in the sense that the stocks have traded very poorly, and yet the cash flow dynamics of MLPs, while certainly by no means perfect or completely immune to what is going on in the energy patch, have held up relatively well. I think there's a few reasons why MLP stocks have traded as poorly as they have in the environment, even though the fundamentals have held up relatively well. MLPs pay out substantially all of their cash flow as dividends. What that means is that every time they have a growth project to finance, they have to come to the equity markets and raise equity. It also means if they want to de-lever, if they want to recapitalize a balance sheet, add more equity into the business and less debt, they have to do that by raising equity. So what's happened is that as the sentiment on the group has changed this year, it becomes a bit of a self-fulfilling vicious cycle. So people see that an MLP maybe has a lot of growth projects they need to finance, and they get worried about pending equity offerings, and that drives the stock down, which then makes it even more expensive to finance the growth. So that's one component. And then the second component, and this is true really of any group that's had as much pressure as MLPs have this year, is that towards the end of the year, there certainly has been a lot of tax loss harvesting. MLPs are down, so significantly this year that a lot of investors are looking at their losses and saying, I need to harvest some of these, to offset gains in other parts of my portfolio. And I think those two things have then spiraled and fed on each other a bit at the end of the year. As we head into 2016, we're very constructive on MLPs here. Our constructiveness is rooted in a few things. First of all, valuation. MLP securities have declined so significantly that they're now offering a very attractive valuation, our perspective, for long-term investors. The valuation is attractive both on a current yield perspective. MLPs are yielding about 10%, which we find to be a very attractive current coupon, and we still expect that over time there will be distribution growth. So we think that sets up very positively. We think that fundamentally, while the challenges in the energy patch are definitely going to continue into 2016, as we see low commodity prices impacting E&P producer activity, we think MLPs, again, will hold up significantly, relatively better than others in the space. And that their business models, which really are characterized by predominantly fee-based businesses, often with strong contract protections, should keep them in good stead, relatively good stead, as we navigate 2016. So you combine an attractive valuation with fundamentals that clearly are going to be impacted, but that we think hold up relatively well. We think it sets a scene for the beginnings of a recovery in MLP securities. I think volatility will continue to be present in the space as long as the commodity continue to remain so low and so volatile, and probably you may not see a significant sustained recovery in MLP prices until commodity prices ultimately recover.